Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, November 4th, 2025. So the Bulls took it on the chin today. It was a bunch of different things that was going on, and I'm not even going to go into the whole repo market and reverse repo market because I'm not really that knowledgeable about it. I do know some stuff about it. But what it basically is saying is that there's some stress in the repo market when you start seeing gaps going up and down. And we've actually saw it right before we had that big drop, and then that's when they started to gap up to new all-time highs. But that kind of environment, I've been saying it's not a healthy market, and when you look under the hood, that's one of the reasons why. But in any case, like I said, I'm not going into it. I'm not knowledgeable enough about to know what happens with all that stuff. I just know that there is some stress in the repo market. But let's take a look at the morning notes. So I said the S&P is going to break through the channel I showed you last night. The next support we have to watch is going to be the 67.88, 67.71, and if that breaks, then we're looking down at the 67.50, 67.40. So this is the channel I was talking about. I said, we're either going to break out to the upside or to the downside, and the gap took us down. We took us right to our 671 pivot. And we had a bounce on there, and it went right to the channel that was broke, and from there it was all selling towards the end. So technically wise, it was a fairly easy day of trading. I took advantage of it. We ended up closing the fund up, but that's also with our quantum stocks getting clobbered again. So the fact that we had a decent day today is good. I could have made a little bit more money with some of the trades we had. We really just stuck with IWM, and I'll show you why. Actually, I'll show you right now because this is a big one. So the opening gap here, you can see, came right down to the 50-day moving average. As I said, I pointed out, we have the 671. So when you have support levels like we have here, as well as with the S&P, it was an easy trade. You take a long side trade right from the beginning, and that's what we did. And hang on one second, and let me get to the chart. Okay, so no, that's hood. Hang on one second. Well, I'm all over the place here. I'm sorry. So that's the daily. Here we go. That's going the wrong way. So this is what happened. We got long with the 42 calls and puts on it, made it all the way up to the 244 12 level, and then from there we ended up coming all the way back down again. We were able to take some of those the profits, but we were doing it on all lines. So we had the 242s. From there, we came up, and then I said you did the same thing with the 244 calls and puts, because with these types of days, you want to be hedged. You're going to have volatility, so you just need it to go one way or the other. But if you thought this market was breaking down and you got short, you just went through an entire day of pain only to come back and come right back to where you were. So I like to do the hedge trades because my take is that when we come up, we're going to retrace. So we make money, either it was going to head down and retrace or it was going to head up and retrace. So the 242s worked out. We made it up to the 244s. I said you can take a put and a call trade there too on IWM. And it ended up that trade went well, and we were able to almost do it. But I also took another one at the 242 towards late in the day, and it was that one was a little hard. It was almost basically a break-even trade, but it took all the way to like the last 15 minutes for that to go. But in any case, it was an okay day overall. I think, let me just see where we closed. I don't even know. Plus 1125. But like I said, we got clobbered on a lot of these the quantum stocks here, 538, 730. So it was not, that was it. It was an okay feat for it. So anyway, let's get back to where we were. I'm going to get off at a 5 minute. So actually, we could use this. So now here's our new little channel right here. You can say it's the 67.68. And then we have this, the 67, hang on, I'm just going to change the color so we see it. and we have the 67.88. So this is our new channel that we have. Now, if the bulls can break above it, they're probably they're going to have to make through these moving averages, but it's only a 5-minute chart, so I wouldn't be surprised. But you can see where this will probably be where the next channel is. And if I just sit there, let's say we break to the upside. Now, all we can do is do this, make this checkered, and here's our new channel. We have it here and here. So you can see we made it up, down. This would be back up again. And then from there, if the bulls can break through it, we have, most likely they'd probably come and try to close the gap up here. Or they're going to extend the channel to go all the way up to the 68.79. So it's really just making trading easy, keeping it simple. Because if we break, like we said, we broke through it. Now it's resistance. So this break below this channel was accepted and they were selling. So now we got to see, is this going to, if this channel breaks to the upside, is this going to be the new one that we're forming here? If it breaks to the downside, then again, we're going to have to go and we're going to have to look at these next support levels, which it's going to be right around, this is the support right here. So this was this support right here. This is where the lows were. If it breaks below it, we're probably looking at a move coming right around this 67.50 and then closing the gap down at the 67.34, and that will be it. All these gaps that I was saying, you basically want to fade them. Came to fruition. It just came, a little bit later than I thought, because typically, once we started getting these up here, they were getting filled the same day, so they were easy fade trades. But this, this one right here took a little bit longer. But like I've been saying, when you gap this market up like this, it's not a healthy environment, and it's telling you something's wrong because we were getting gaps in both directions. So on the 15-minute chart, you can see we did possibly have some bullish divergences that are forming right here. But again, if they're going to move the markets, they're either going to gap it up or down. It's just the way the market moves. I don't know. I don't understand the rhyme or reason. But what I was showing in the room was this was almost a classic ABC move where you have your A, this is the B, and our C this is our target right here, down at the 67.72, made it a little bit below. So that's, it's an ABC move right there. If we start extending it, then what's going to happen is this is going to turn into an impulsive move. And if that happens, then it's going to start saying this may be a very important top, and where we may be seeing that 10% correction a lot of people were looking for. And speaking of that, that's actually, I know the Goldman Sachs CEO came out and said something about a 10% correction. That kind of sent the markets into a little bit of let's say that got them in a sour mood. But if anybody, it really what that is, that's the algos that are just looking at numbers. Because if you go back and read what he says, it's going to be within a 10% correction within the next 12 to 24 months. What does that do for anybody? It does nothing. We probably have a 10% correction every 12 months. So I don't know why the market got upset about that. But you know what? My reasoning, I've been saying it's the valuation end of things with a lot of these stocks that have got up here. The breadth of the market has been absolutely horrible. It's been a handful of stocks that's been moving this market up. And the problem is eventually people are going to take profits. And when that happens, we get big moves to the downside. So is this it? I'm not sure. It's in the window that we're looking. But, we've seen these drops happen before that came up and we're at new all-time highs shortly after. So I'm not going to assume anything. I'm going to keep trading the way we are. If we start breaking through, some important supports, then you just take a long-term short position until we get down to our downside targets. So if we make a low and let's say they gap down tomorrow, down to the 67.36, that pivot, from there, we're probably going to have some bullish divergences. So my guess is they're going to rally it, but instead of rallying it and coming back down, they'll probably try to bring it back up and stretch some of the bears out that are going to be shorting this whole way. And again, I think the bulls are going to have some serious issues trying to get through to 68.20. And, that's actually what I also put in the morning notes was that, if the bulls, where are we? Okay. I do expect the bulls to step in near the open, but they're going to run into resistance around the 68.20, 68.30. So let's go back. We have this bounce right here. This is the low. made it up to 68.22, exactly where I thought it was going to be held down, and we came there. So these are pivots that's worked out perfect. It was a very, like I said, a fairly easy day of trading if we didn't have the quantum stocks getting clobbered. Even though I was protected with some of them, they just went down a little too much on it. But in any case, let's take a look at the 60-minute chart. So the 60-minute chart here, I was saying maybe they're trying to start some bullish divergences, but we're gonna have to start seeing, this things turn up. We're pretty oversold right now. 67.37. This is the gap closure as well as the 200-day moving average on the hourly chart. So this is where a lot of buyers are going to be waiting right here. And remember, that's pretty much right where I was saying the next pivot is. That's right here at the 67.36. So if that fails, then things are going to start getting a little bit tricky, because guess what the next, this is the 67.60 right here. So if it breaks below this, the next pivot's going to be the 50-day moving average, and that's down at the 66.50. And, this is really the big line in the sand. If the bears can get it through this 65.50 at some point, then we could be coming down and testing some of these lower levels that I think we're going to be testing. So I don't know what else really to put here. I'm open-minded. If we gap down, I may be interested in buying. If we go up, I'm going to see how it plays out, because what happens is if we pop up tomorrow, we want to see how support holds. If that gives way, then we're going to continue on the downside. And then for IWM, it's the same thing. We're in this. If we're forming this channel, which I'll give you right here, this would be our upside target right here. So hang on one second. Okay. So we have the low down at this 60 at the 240.99 level, and I'll actually make this red so it looks like it's the same. And then we have the top of it that's sitting right at the 244. So this could be the range that's following. Now, if this breaks down, as I put in the morning notes, we're probably coming down to the 239.61 and possibly down to this 237 level. So let's see what plays out tomorrow. Like I said, let's just take things day by day. It's not really the biggest concern on just doing on a day by day is owning the quantum stocks. But like I said, I can buy more protection and say, okay, I'll just give up this if this is the lowest in and it goes up. But that's why I've been buying and selling the covered calls. I've been selling the covered calls, and I've been buying some protective puts. So things that we would have been down probably 3,000 over the last few days, we haven't really been down at all. So, a little bit today, but nothing bad. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.